Hello and welcome back. And if this is your first time here, I am Dr. Stock, Doctor of Education. In this video, I'm going to talk about three of the big retail plays that we have out there. Each company is fairly interesting. The first one I know I like for volatility, I should say, and the other two I actually am an investor in, and I really enjoy the companies. I think they're very solid companies. One is up and coming. One has really proven its growth story and has already moved into profitability. So I'll share those with you, and then I also have some off the beaten path stocks to also share with you in this video, because the nice thing about that is that they don't have a big influential following where we have the institutions and hedge funds kind of sort of playing games with the retail traders, and so we don't get as many surprises, I would say, with those. And so I think that they can provide a little bit more predictability with the opportunities that they have laid out for us from a trading perspective, as I don't follow these companies as an investor. So let's get right into it. So I will be using the Moo app, and you can check out the link down in the description to find out how you can take advantage of that link to get your free stocks. I'll come back to that more later. For right now, let's get over to Moo, and the first stock that I want to show you is C3AI. And this is an update on C3AI because we saw this pattern play out where, let me grab some line segments here. We had that top. There we go. And then we had this come along the bottom here this way. Perfect. And in a previous video, I said that this stock was going to move big. I didn't know what direction. I thought it would be down. However, it's an AI play, and that hype is right there again to surprise me. And I did mention for options plays, long straddle, long strangle. Either one of those things could have taken advantage of not knowing the direction, but expecting a big move. So that's something to pay attention to, that or at least research on if you're not really too keen on the option plays or you don't really know that much yet. There are ways to play volatility, and this is one of those places where you can find that. Options premiums do run a little bit high on this one, so buying those calls and those puts is something to be fairly expensive, and then you're hoping for a higher premium to come off of that, and this is one of those. So I put this in, and then the stock did move big. As a matter of fact, the very next day, we had almost a 15% movement. This is about 14.5 for C3AI, and I had some support and resistance lines on here. Depending on which way we went, you can see this top red line where we had that resistance taking place. If I zoom out, there we go. And I might need to adjust it this way. There we go. I said there'd be a $44 resist. We actually went up all the way up to $45.22 before pulling back and closing just above $43 per share. So C3AI, just an update on that one. And I do expect this one to settle a little bit from here. I don't think that we break up above that $44 and remain there unless we get some significant news from that company. Right now, they don't really have a lot of the revenue to justify what we're currently seeing. Like I said, it's AI hype. It's a very promising company. However, this valuation I don't believe to be sustainable, and it keeps me from being an investor in C3AI. All right, so with that, I want to go over to my friend SoFi. Now, I am an investor in SoFi because I do believe that this is a company that's going to turn a profit for us sooner than later. And Anthony Noto, the CEO, says that we expect that by Q4 of 2022. So, 2023. Forgetting what year it is. I guess that goes along with finally hitting 40, maybe being at the top of that mountain before starting that downhill side of things. Unless I live to be over 80 years of age, which, given my family history, there's a good likelihood that that as long as I live out my natural life, that I get to see that take place. So fingers crossed on that one. So away from mortality, back to the stock market. So we peaked around $9.61 per share. So Anthony Noto, CEO, Q3 2024 expects profitability coming for SoFi, and SoFi has been putting in that growth story so far. We had this little drop off that you see back here. That's because the earnings came out with not as much growth as was expected. So we'll see with this end of the student loan moratorium coming in if that story, the forward guidance that we get from Q2 for Q3, Q4, so for the remainder of this year, possibly into 2024, if they give us that, we're looking for increased guidance from there. So you can see the run that SoFi has been on recently, and as an investor, it's nice to watch that take place. I would like there to be a pullback in the price too, and take some more. In that position, I have sold some calls on this because I do expect it to pull back from where it's at right now. I didn't sell the calls because I'm looking to get rid of my shares. I sold the calls to take advantage of the premium, and then using that premium in order to buy more shares. I don't believe that the shares that I have right now tied up in those covered calls, I do not believe that they're going to be called away from me on this one. I think that we're really in that overbought territory for the RSI, and that we will pull back, and that we will sooner see ourselves below $9 per share before we see ourselves well over $10 per share. And as of the pre-market this morning on SoFi, they're actually right now sitting at, this thing's just in my way. Let me just do that. There we go. Now it's out of my way. Right now in the pre-market, we're actually at 988. So holy cow, SoFi is really pumping in there. And we do have the PPI coming out, by the way, at 8:30 a.m. So when that comes out, that could certainly change that story. We also have the FOMC meeting at 2 o'clock and then 2:30. And so these are things that can definitely impact that. And maybe they make me eat my words that we actually see us popping well over that $10 per share. And that just takes those covered calls that I sold and makes them, more at risk of being assigned. But that's part of the risk that you take on. There's nothing risk-free when it comes to making money in the stock market, and options are definitely one of those risky areas. And when you sell a covered call, for me, even though I'm still selling those shares above my cost basis, and so it's still profitability, including that premium that I got, then there's still that opportunity risk that if SoFi should continue on to even higher levels, well above that $10 amount, that $10 strike price that I used, then that's an opportunity risk that I have to face in order to sell those, unless I buy to close them, and then that could be something. So I do expect for SoFi that in the near future that we do pull back close to $9 per share. Maybe we hit psychological resist there. I think it is likely that we hit a hard resist right around $8 to $8.50. And I know it's a wide range. And honestly, I think that there's enough hype here. We pull back. We have the golden cross moments. We're above the 50-day, above the 200-day, both of which are becoming positively sloped. And I do think that we stay in that bullish territory for SoFi, assuming that they keep on going with their solid direction with the student loans, with their lending programs, everything else that they have on their platform. So we'll keep on watching that one. All right, on to Tesla, and then that'll be enough of the mainstream, and then we'll go off the beaten path a little bit to give updates on some other stocks that I talked about. So those, I believe, actually have some opportunities coming up that can be fairly predictable as you get in the stock market for what we're going to see from those. For Tesla has not yet had its golden cross moment recently. And as I've mentioned before in my video, the last time that they were above their 200-day was back in September of 2022. And man, did they gap below that 200-day until January when they really started turning things back on. And right now there are demand concerns, although we have Ford and GM joining them by taking advantage of the Tesla supercharging network. Tesla is still the leader in the EV space. Like I said, I am an investor in Tesla over at the Patreon. That link is down in the description, by the way. You can find that. You can see what I have for my spreadsheet for the earnings projections for Tesla through 2030, which I'm going to update for their Q2 earnings for 2023. And I'll post that over at the Patreon so they can see that as well. And really, we just need to wait until July 2nd. It should be when we get that next quarterly delivery number from Tesla, which should make for some really nice adjustments to the projections. And then in this one, I'm also going to include their storage. So I think Tesla's another one. It might have a little bit more room to run, but it is severely overbought. It's been above 70 on the RSI for a long time now. I do think that soon it does pull back. And so for you traders out there who have been long on this, maybe you bought in back here when there were earnings and you saw the price drop down below 160, that you took advantage of that. That is a large run up to $260 per share. And so for me, if I was trading this instead of investing this, I would probably let go of those shares at this point in time, because I do start to get nervous that with this gap up above the 200-day like we have right now, even though we're nearing that golden cross moment, I would expect some softness to come in and then pick back up when I see signs that we're going to turn back around. I do not think that we come back down to the 200-day. That's below $200. That would be a very, very, very hard area of support, I believe, for Tesla at this point. And I think it's more likely that we actually see something right around that. Looks like maybe that $230 level would be about where we could have that pullback to, which puts us about halfway between this peak and the 200-day before we start rallying again. And market bias can certainly be something that influences that. All right. So now to the off the beaten path. So the very first one I want to talk about, just another update because I did talk about this one in one of my previous videos. This is Dynavax Technologies. I know nothing about this company. This is purely technical when we look at these. And so what I saw when I was going through and screening different stocks, I happened to see this big sell-off that we got, followed by an engulfing candle that happened right after that completely wipes out that red candle that came before. And I said, this company is going to most likely jump. And then it did that very day. So as a matter of fact, I posted this video, it was about 9:15. And so by that point in time, we didn't see this price action, and then the market opened at 9:30, and then, well, what we see is an over 5% jump, and this is one that has enough momentum, and we have it volume supported. We could possibly see a further push up in the market today, and I think that we cap out around 13 or maybe above $13 per share. Again, we got to keep market bias in our minds. And when I say cap out, I don't mean necessarily in today's market. That could be something that happens over the next several days when we look at this, nearing a golden cross moment as well when we look at that. So we do want to keep an eye on this one. It's off the beaten path. It is not hotly traded, although it is traded enough. We have volumes in the hundreds of thousands to millions for this. So even though this isn't something that's a super hot stock, look at how much we stayed above 50 in the RSI. This is one that I think is going to have more predictability to it than what we see for the more popular stocks like C3AI is just absolutely wild. SoFi has been crazy. Tesla has been crazy. This one, it's off the radar for a lot of people. Doesn't get a lot of attention. It's why I like it. And, well, it played out so far. Let's look at some of the other ones. Here's another one that I reported on in my previous video. This one's EOG. This one I am bearish on, that we have dropped below the 200-day, we're below the 50-day, and I think that this is one that's going to keep on falling on us, and we actually could drop maybe another 10% from where we're at right now, so that's a significant fall. So for this one, if I were to trade this one, sell it short, about 114.68 is what I have here. That's about where the 50-day, as a matter of fact, I can tell you exactly where 50-day is. When I look at this, there we go, $114.89, and that indicator is up here on Moomoo. Like I said, the link is down in the description. Not only if you use my link in the description, you get your 17 free stocks, but you also get access to a wonderful trading app, and it is cross-platform. It is on mobile as well, so that's something to watch out for. So this one, I think, could give up another 10% in the short term, and it's possible that the floor falls out on this. Well, this is the $100 mark right here, so we get up about 10% in order to get there, and this was a little bit softer, that we could see about a 4 to 5% drop in the nearer term for EOG Resources. All right, the last one that I have for you is ASO. Sorry for the bumping around that I have there. I had my phone covering up my notes. There we are. So we have the 50-day coming down for the 200-day. And the one thing that I like about being bearish on this one, about the idea of selling this one short or maybe taking out some longer-term put options on it, is that we have the 50-day coming down towards the 200-day. We haven't seen the death cross moment for this one, but it is possible that we start to see that play out. And so for this one, breaking that 200-day could be something that cancels what we have, so that's something to watch out for. But if that continues to serve as resistance, or if we even fail to come back up towards it, we could be filling out that death cross pattern that really has a lot of weakness coming forward for, and I'll pop that open. There we go, ASO Academy. So this is just another stock. So just to recap, Dynavax was the first one, DVAX. That one, I think, has a little bit more room to run the bullish direction. And then EOG was the second one, bearish, and I think that one has about 10% to fall. And then when we look at this one, we can give up easily from where we're at, about 8%. And if we give up that 8%, the floor falls out and we can drop all the way down to about $40 per share, which would be a 20% drop from where they're at right now. So we'll see if this plays out. The RSI is showing bearish on this one, so especially if the RSI stays below 50, when we look at this, that could be a very good thing, depending on how you're trading, of course, if you're an investor in this and you're looking long-term. But all three of these stocks, I got to tell you, they are off the beaten path. They are off people's radars. They are not exciting, and that's what can make them so lucrative when you look at those. And I'm not telling you to buy anything, sell anything. I just want to draw your attention to it, so that way you can look for those opportunities, not just where we have those big and exciting retail plays with the institutions, with AI involved, just some of these other more boring stocks that probably the technicals are taking over, and the fundamentals could be something that you study more on the investment side, but I think technical is the way that these are playing out so far. I think they're going to continue to dominate the fundamentals in the near term. So that's what I have for you in this video. Do yourself a favor, down in the description, make sure that you check out that link that I have for Moomoo for you to get your 17 free stocks. And check this out. If you deposit $100 or more, you get 5 free stocks. $100 cash reward, so you can now have automatically another $100 to trade with, and 1 free share of C3AI, which currently is trading above $40 per share. So $100 cash reward aside from that $100 deposit that you put in, you already have a 40% gain for that deposit. A deposit of $1,000 more, 16 free stocks, $100 cash reward, and if you do $5,000 or more deposit into that trading account, you still get the 16 free stocks, you still get the $100 cash reward, and you get that 1 free share of Tesla or Google also involved in that. So take advantage of that if you would, please. If you like my commentary and like to hear more of it, don't forget about that link for the Patreon down in the description. Click on it, sign up. You get access to my Patreon exclusive content as well as access to my private Discord. Thank you guys for watching this. I really appreciate it. If you like what I had to say, give me that like button, hit the subscribe button, ring the notification bell. Please hit me up in the comments with anything that you would like to say about this, whether it's a hello or you have questions that you'd like to ask, or if it's just feedback about the video itself. I appreciate anything it is that you would have to say. So thank you again for watching this. I am Dr. Stock, Doctor of Education, and remember, learning is earning.